Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 1st, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES post FOMC statement and rate decision. A hawkish Fed sending the market lower here in the previous session. You can see the high range day downward, nearly 75 points of range yesterday, as this thing really heated up, especially late in the day. This market here got 72 points of range, one of the bigger days of the year, the biggest down day of the year so far. January 8th was the biggest up day with about 88 points of range. Big time selling pressure here. We got new FOMC key levels. See the description below for the additional key levels for all of these various markets. 49.13.5 is the new FOMC key level, and the selling pressure that we saw yesterday could continue to spill over for an impulse continuation down. This is going to be very important to begin the month of February. We have a higher value relationship for the month, but after the last couple of days of the month, price closed just above the month's midpoint. 48.29 is that midpoint, and any pullback into that mid, ideally bulls would defend and keep this thing higher. But a failure there, say a failure at 48.25, that opens up the previous month's low back at 4700. 4702 would be that low. So this is going to be very important to see how the market responds into this CLVN here. A retest could keep things in a box or perhaps higher. A failure here and you're opening up some downside. If this is going to continue lower, you're going to look to see bears defend the early pullback. Already kind of defending the morning pullback right now toward the previous session's midpoint. You can see a little bit of a tail here developing at the upper end of the pre-market range. Again, any pullback this morning that's rejected. If we get a strong high this morning, we could be looking downward somewhere between 60 and 80 points lower here as this market again continues to try to find an early low. So again, this market could be at risk of falling quite a bit more if the previous month's midpoint is taken out. It'll open up that 4700. You start to have kind of a head and shoulder look to it at that point, with the potential of a bit more of a pullback. So right now, keeping an eye on the previous session's midpoint, 4900, 4902. Any rejection there during the RTH session here could suggest further weakness ahead, especially if we fail through the previous month's midpoint. Big levels here to watch early on. If we take a look at the NQ, similar price action here. The previous session not quite getting the selling pressure that we saw out of the ES or the YM or even the Russell 2000. The NQ started its sell-off a bit on Tuesday, dropping here much of Tuesday. Wednesday's range rather small comparatively speaking. It did drop away from the FOMC key level in the afternoon. This one right here, again, you're seeing a little bit of a retest at the midpoint of the previous session, but even a push through the high could provide a bearish failed new high trap that could lead to an outside day down. Again, right now showing a little bit of weakness here off the previous mid, but even if we do push it beyond it, again, what we're trying to do is find a strong high for the morning. If there a strong high develops there, we could be looking down somewhere between 300 and 400 points today for a downside target. Like the ES, this midpoint here is going to be very important for the month. The early test here at 17,063 will be very important. This little LVN right there is going to be very important, the 17,165 zone. So the first test into that area is going to be huge here to begin the month, because if there's a failure there, it opens up the other side of the range. Just like the ES would rotate back toward 4702, this 16,334 would be in play if we fail in this area to begin the month. So again, bulls want to keep this area bid and keep prices in this range and perhaps higher. A failure here and you're rotating right back down. Now again, keep in mind we do have some big tech earnings later on after the bell. We have Apple, we have Amazon, Meta. That could be huge here later on after the bell. Right now, again, after recent two-day selling pressure, any pullback could be sold here in the very near term And again, attacking this LVN will be very important here. If bulls can keep it bid, we may keep things higher. A failure there, and you rotate back to the other side of the range. Looking at crude oil, this one's up about 1% at the moment. The previous day here got a very heavy pullback and was not able to quite find any lows. It was sputtering on the lows, couldn't really jump off the 76 level too well. Today here we're seeing a little bit of a fade after trend day back up, back toward the mid. One thing we've mentioned about crude oil is seasonality takes us quite a bit higher at this part of the year and into the first week of March. So we may have another 4 to 5 weeks of strength up ahead. We have a higher value relationship right here developing from January to now February with a positive close. Any drop into the pivot range could be a buying opportunity for a check mark move higher for the month. What we're looking for is a test into 80, and by the end of the month, can we get into about 84? This could be somewhere around a 10-point month for the high to low range. So if we can find a strong low to begin the month, you could look higher about 8 to 10 handles, and you could have your upside target. So if this thing can pull back even as deep as 74s, that could still provide a buying opportunity for a push to the opposite end of the market structure at 84. Right now, showing a little bit of strength here at the moment, and additional strength will come through the previous session's midpoint. If it can get through that mid, it starts to open up a little bit more upside. And again, right now, this market remains quite bullish despite a couple of days of weakness. Higher value relationships, you have the bullish PIMA crossovers that are developing here, and again the bullish seasonality that could take us higher for the month. Looking at gold here, gold down about 0.7% at the moment. Seeing a bit of a rejection off of the previous session's FOMC key level, the 2064s that went offered. A strong rejection here of prices at 2070. We've mentioned 2070 earlier this week and how it continues to be defended here in that vicinity. 2070 is basically the previous year's close price or thereabouts, and it's also the midpoint of the larger key range. So right now you're still seeing a bit of that weakness off of that area today, seeing a rejection here of prices again at the FOMC key level and above prices above the previous session's mid. Now this one's a little unique here where you have a lower value relationship with a bullish bias on the close. So that would suggest that any pullback into the midpoint could be defended for a surprise rally unless the midpoint is taken out. So that midpoint is going to be very important, and as of right now it's being defended by bulls just at least marginally. So a failure here and you open up some downside. If it can hold this level, you may actually try to eat through the 2070 level. Again, for gold, I continue to say that this is kind of a messy market range at the moment. It's kind of stuck in the middle of this range here after developing this large key range. So letting it develop a little bit here may prove fruitful down the road here. As of right now, it's kind of just showing a little bit of resistance at 2070, but not really seeing a whole lot of two-way trade at the moment. Been mostly range bound this week. So we'll continue to watch this one as it develops. If we take a look here at the YM, this one did see a bit of selling pressure in the previous session. You can see here it put in a very strong high early in the day. 38,720 is that high. Drops away from the level and goes outside day down. A high range day as well. Of over 400 points of range. It ended up finishing the day at 473 points of range. Anytime you get over 400 points of range in the current market, it's a pretty decent sized day. Now again, once you have an outside day down of this magnitude, any early pullback to begin the day could be sold for additional new lows up ahead. So again, if you can find the strong morning high, you could be looking down about 300 to 400 points, and then you can get your downside target at that point. So that's going to be something to keep an eye on. Right now, again, a little bit of an expanding intraday pre-market range. If we can get a strong high to define the strong high in the morning, that could open up some downside ahead. Now, this midpoint is going to be very important, 38K. As we talked about before, the previous month's midpoint going to be very, very important. To close so close to it means that this level could be at jeopardy here, and a failure at that point could open up the lower end of the previous month's range. Are we about to go back across the range toward 37.3? That could certainly be in play. Again, that could also develop an expanding range. So is this a strong day one high? Likely so, and if so, any early strength today could be dealt with some resistance here, and that could lead to a return back down to give us a big test at 38K. A failure at 38K, you rotate back across the range. And even if this move does come to fruition and we take out these lows, it could provide the next buying opportunity back up the range, perhaps to create a new larger key range. But this is a developing D shape right now, so even if we swing across the range, it could still swing back the other way up ahead. So right now, focusing on a strong morning high. If it develops, we could be looking downward about 300 to 400 points here today. All right, that is it for now. We'll see how this develops here the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.